It was an eventful Friday that capped off an eventful week, one that saw the Federal Reserve cut interest rates for a second time this year, and an attack on the center of Saudi oil production that boosted crude prices. But through it all, the stock market's major averages continued their climb toward all-time highs. And early on today, it looked like that might happen. But it didn't. A headline this afternoon related to the trade war between the U.S. and China reminded investors once again that risks still remain, and stocks reversed course and headed lower. The industrial average by the close was down 159 points to 26,935. NASDAQ was down 65, and the S&P was down 14. And with today's sell-off, the major averages snapped their three-week win streak. Bob Pisani reports tonight from the New York Stock Exchange.
Stocks failed to close higher for a fourth straight week, but the Dow and the S&P are still sitting just shy of new highs. The markets are clearly still fixated on trade developments. That was amply demonstrated today. The S&P lost nearly 20 points in the middle of the day on word that Chinese officials would be cutting their trip to the U.S. short without giving any real reason. So, predictably, we saw global farm-heavy industrials like Caterpillar and Deere sell off, along with other trade-related movers like semiconductors, over fears that U.S.-China trade talks may not be going as well as some were anticipating. Still, the market has proven remarkably resilient. The S&P is little changed this week despite a string of other potentially bad news besides trade. The Iran sanctions, the surge in oil, and very poor China industrial production and retail sales numbers. That was earlier in the week. But investors remain cautious about chasing new all-time highs ahead of pivotal trade negotiations. We saw that today. The Federal Reserve, remember, also seems to be moving to the sidelines on any rate action for the moment. Cyclical sectors that are sensitive to the global economy that had rallied in prior weeks, well, they're all back down this week, including industrials and metals and mining, retailers and regional banks. Next week, we'll get no shortage of potentially market-moving catalysts, including another look at second quarter GDP, international trade, personal income, consumer confidence, all coming. We'll also get plenty of commentary from Fed officials and a host of housing data, which has been much stronger than expected lately. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.